Are you a mutual fund investor? And this year you have earned good returns on your mutual fund investment, specifically in the month of November and December, and you are in a dilemma whether to exit and book profit or to continue investing in the mutual fund to earn more returns, or you are completely new to mutual fund products and from the year 2021 you are planning to invest in the mutual funds but confused which mutual fund products to invest, how many mutual fund products to select, how to plan your portfolio to invest in the mutual fund products. In both this situation, today's session going to be very interesting and useful for you. Stay tuned. Hello, this is Dr. Anjali Rane, and in today's session I am going to tell you about whether to book profit or to stay back and earn more returns for the year 2021 in mutual funds, and which are the best mutual fund products for the year 2021 to invest, which can earn you a maximum returns with a minimum risk. So in today's session we are going to discuss about how to invest in a mutual funds in India 2021. Firstly, let's know how to plan the investment in the mutual funds, the do's and the don'ts, and then we will discuss the best mutual fund products to invest in the year 2021. Also we will discuss about when to invest and when to exit from mutual funds in order to avoid the risk and to maximize the returns. Myself Dr. Anjali Rane, and I am going to explain you about complete investment plan in mutual funds in India for the year 2021. So to plan the mutual funds investments, you will have to always remember that your investment should be a goal based investment. You will have to plan in the initial stage itself whether the investment that you are doing is for retirement planning, for the tax purpose, for your children's education, what is the reason, what is the goal you want to achieve, and how much for how much period you want to invest your money in. So when you are planning these goals initial in advance, so that will help you to select the right products based on your goals. Also you'll have to make investments regularly. I would always suggest to go for systematic investment plans or SIPs rather than investing in a lump sum, so that you can make use of the ups and downs, the volatility in the stock market, and get a returns which will beat the indices. See that your mutual fund product investment is well diversified. Suppose for example you're planning to invest every month 10,000 rupees. Don't invest all your 10,000 rupees in one particular mutual fund product. See to it that you have a proper diversification into a large cap, multi cap, or a mid cap, small cap, tax based funds, etc. And whenever you are making an investment, keep a track of your investment and see to it that at least once in 6 months you will revise your investment and see whether you are generating a good returns, whether to continue with your mutual fund investment SIPs or to stop the SIPs and invest in the different new funds. The longer is the investment in the mutual fund, better will be the returns that you will generate. Investing in a mutual fund is almost like you're doing in FD, or if you're investing in a postal deposits. So higher the term that you're investing, you might generate a good returns, and also if you exit the earlier, even before a close that term period, you might end up paying some exit loan also. Keep checking the ratings, the fund manager, the track record of that particular fund for the year in the past performance, so that you can generate a good return and plan your mutual fund portfolio in a better way. The common mistakes which we usually commit and which you shouldn't commit is, firstly, not to panic. The mutual fund investments are subject to market risk, yes, but if you are investing in a mutual fund in a systematic way, there is no reason to panic. The ups and downs in the stock markets are common. Everything that goes up should come down, isn't it? But if you are planning your investment in a systematic way, then definitely you will generate a very good returns on your mutual fund investment. Don't do too many SIPs in order to diversify. Suppose if you are investing every month 10,000 rupees, just because you also get an SIP for as small as 400 rupees, doesn't mean that in 10k you will invest in some 10 to 15 different mutual funds. No, that is not a right way of investment. Choose the best 3 or 4 mutual fund products where you can invest with a sound diversification, rather than investing in too many SIPs. Also, do not exit too quickly. I have seen many a times people invest in an open-ended fund, and once it becomes 6 months they just quickly exit, unless and until it is an emergency that you have to remove the fund for your some emergencies. It's always better not to exit and keep the fund in that SIP for a longer term, say for at least for an year or two, in order to generate a good returns. So these are the few things you will have to plan before investing in a mutual fund product. So let's know now which are the different categories of mutual fund that we can invest in. I will try to give you an example of my own mutual fund portfolio of last year, and where I committed a mistake and how I want to change my portfolio for this year. If you see, the last year I had invested 30% into a large and a mid cap fund, 29% into a large cap fund, 6% into a multi cap, and 14% into a small cap fund. And also in the funds of and overseas funds, I had invested 13% and 8% I had invested in a arbitrage fund. But after seeing my returns that I have generated, and also seeing the market conditions with the SEBI's reclassification of large cap, multi cap, mid cap, small cap investments, and the definitions of these different categories of fund, this year I want to skip my investment from this mid cap fund, and I would like to invest more into multi cap fund, and also I would like to exit from the arbitrage fund. So this is the small changes which I have planned. So accordingly, you also, whenever you are planning to invest in a mutual fund products, always make a plan, a proper portfolio, and then go ahead to invest in your mutual funds. So how you can plan for your mutual fund? So initially, if you have to see with the large cap funds, how you can plan the large cap fund investments. So as per the reclassification of SEBI, the top 100 biggest firms in terms of the market capitalization, so whichever fund, if you see that in the last 3 to 5 years data analysis, 90% of the large cap funds are not able to outperform the index fund or passive fund. And also, when you are investing in a large cap fund, you have to pay 0.5% to 1% extra fees on the large cap, though the same stocks are in a Sensex or a Nifty. Compared to a large cap fund, index fund have lesser fees. Also, these active funds have a ceiling as per SEBI now. The SEBI has a restriction of 10% investments So even if a stock is performing in the best way, uh, in any mutual fund product, they cannot invest in one single stock more than 10%. So that's the ceiling that SEBI has given. Whereas on the index funds, they do not have any ceilings, and since they simply track the index, so definitely they will outperform the large cap fund. So I would suggest, rather than investing in the active large cap fund, better to invest in a index fund. So for this year, the consistently performing best fund which you can invest is HDFC index fund, that is the Sensex plan. Now why Sensex plan? Because if you see with the Nifty, it has 50 firms, whereas Sensex has 30 stocks, well concentrated, only 30 stocks. So I would recommend to go for HDFC index fund Sensex plan as a part of your large cap fund mutual fund portfolio. If we'll have to think from the mid cap fund point of view, so after this reclassification by the SEBI of mutual funds, see, the first 100 top in terms of market cap are considered as in large cap funds, and the 250 first onwards are taken considered as in small cap fund. So in between 100 to 250 first, so there are only 150 stocks which are left in the category of mid cap fund. So that classification itself makes me feel this category not so interesting, because since there are only 150 middle level stocks which are left with a fund manager to choose from, out of this 150, 30 to 40 fund manager has to choose. So he will be left with a very limited scope to outperform or generate more returns. So I would rather say, instead of going for investing in a mid cap fund, better to invest in a multi cap fund for this year. So I am not recommending any fund for a mid cap category for 2021. So in small cap fund category, like I said, after the reclassification, the definition of a small cap fund, so the SEBI has said anything below 7,000 crores or 250 first company and lower is considered as a small cap fund. So we have, if you see in India, around 5,000 plus firms listed in the Indian stock market, out of which hundreds are large cap companies. Now 150 fall under the mid cap category. So almost around 4,900 I would consider, or around 5,000 we can say, are the small cap funds, out of which many or majority are not investable. So that makes the fund manager to make a decision of investing in a small cap fund to be considered very seriously, and it's very essential for the fund houses to make a very perfect decisions while selecting this 30 to 40 fund out of this 5,000 mutual funds. So if you consider also one more interesting thing about the small cap fund is the past performance was the Nifty small cap 100 index, which was at 6,000 in the year 2008. Now then it crashed to 1,800 when there was this financial crisis in the year 2008, and then it again increased somewhere in the year 2018. Almost 400% was a growth in the small cap fund. And now if you consider in the month of December, now small cap Nifty small cap 100 index stands at 5,700. So now does it mean that it's flat throughout? No, right? So it means that there were many sharp ups and downs and corrections which have been taken place in the small cap fund category. And altogether, if you consider, this was actually a good wealth creation and kind of an mutual fund product. And also this has given a returns of almost around 20% consistently. Now in this category, if I'll have to suggest you, I will definitely suggest you an Axis small cap fund. Now why I'm suggesting you Axis small cap fund to invest for this year? Now Axis small cap fund is a brilliant performer and it's very less expensive, and also the AUM of asset under management of this Axis small cap fund is less compared to other small cap funds. And see, there is one more thing which we'll have to always remember about small cap fund is, now whenever you are investing, we'll have to consider that the small cap fund, when there is a bullish trend, small cap fund outperform the large cap fund, and at the same time whenever there is the market falls, the small cap fund fall more sharply than the large cap fund. So though it looks riskier, at the same time small cap fund also gives us a good returns compared to the large cap fund. And only thing in terms of small cap fund is that we have to consider the timing of investment and timing of exit from the small cap fund. That makes a big difference. Now how to consider with a large cap fund? We'll have to always see that whenever we are investing in the small cap fund, we'll have to see that whenever the valuation is cheaper, invest, and always whenever the valuation becomes expensive, exit and book profit. So this is one very important thing to be remembered with a small cap fund. So the important bearing on the amount of risk that we are undertaking is to be considered very carefully whenever it is a small cap fund, as it tend to do very well in the bullish market, and whenever the market is bearish, this fund might turn very negative. So it's risky but returns are good. Plan your investment in a better way. Presently, if you consider, small cap funds are undervalued, and this is actually a right time to invest in the small cap fund. So go for it, invest in the small cap funds. Now other than this small cap fund category, I would also like to say you about multi cap fund. This is the one fund category I just loved. Somewhere from last 6 months I have been investing in multi-cap fund category. Now why did I like it is, I have been investing in one particular fund from the last 6 months, and it has given me an whopping 63% returns. Isn't that sounds interesting? Yes. I will tell you which is that fund, and before that I will also tell you how this multi-cap fund is more beneficial. Now multi-cap fund, also after reclassification, now SEBI has made a ceiling in the multi-cap fund that if there is an 100 rupee being invested by the mutual fund fund manager, 25% of that 100 rupees should be invested in a large cap, 25% should be invested in the mid cap, and 25% should be invested in the small cap, and remaining 25% the fund manager has a freedom to invest wherever he is interested, whichever the fund he feels more attractive. Now that makes the multi-cap fund category more interesting, because a fund manager has a little bit of freedom to invest Other than this 25% of investing in the large cap, mid cap, and small cap, remaining 25% they can think of investing maybe in a FOFs, or if they feel large cap is more interesting, they can invest little extra in the large cap. So this is how they can go for it. Now, which are the fund that I will suggest for the investment in the multi-cap fund? Yes, I was telling you that one fund where I generated a whopping 64% return. Now that fund is a Parag Parikh long-term equity fund. This fund no doubt is a best performer, and it is actually a leader in this category of multi-cap fund. So go for it. Along with this Parag Parikh long term fund, I will also suggest you to go for one more fund if you are interested to invest more into multi cap fund category. The second fund that I would like to suggest is Invesco India Contra Fund. This is less expensive. This is a consistent performer from the last 3 years. So go for these two funds in the multi-cap fund category. One is Parag Parikh long-term equity fund and Invesco India Contra Fund. If you are planning to invest in a mutual fund in order to save your tax, so tax saver fund or ELSS fund, then I will suggest you to go for a Mirae Asset tax saver fund. This is also a consistent performer. Other than this, if at all anybody is interested to explore the foreign overseas market, you can go for Motilal Oswal Nasdaq 100. Yes, I have also invested in this Motilal Oswal Nasdaq, and I have generated around 51% in the last 1 year returns on this Motilal Oswal Nasdaq 100 fund. So this is one more category which you can invest other than this large cap, mid cap, and a multi cap and a small cap fund category if you are interested to invest in. Now we will also discuss about when to start a SIP and when to stop, when to exit, when to book profit. So this is one big question everybody has, isn't it? Now, when is the right time to exit and book profit? I will always say that markets are volatile. Now you have to think, should you sell now? Now every time when there is a boom, when there is a market is at an all-time high, we will think that any moment market might crash, so it's better to exit and book profit. So every time a market reaches to one particular all-time high, we will always have this panicking that market might crash. I will suggest that never think about whether the market is at an all-time high or market is at a low. So that should not matter if at all you are investing with a goal-based investment strategy. If you are investing, unless that if you have invested from imagine you have invested from for the last 4-5 years, and now if a market is at an all-time high, and in the next 2-3 months if you want that money, now at that point if the market is at all-time high, better not to wait for, take a risk of waiting till the next 2 months, exit from that, book profit. But if your investment goal is for a longer time, even if a market crashes now, you don't need a money at this moment, and you might need the money after another 4 years or 5 years time, then I will say do not exit from that mutual fund. Keep your investment, because every time when the market goes up, it has to come down, and at the same time whenever the market comes down, it has to go up again. So this cycle keeps continuing. Every time this all-time high keeps changing. If you remember from the 2008 when there was a financial crisis, markets were low, or it is a scam of 1992. So every time if you see the period of 5 years to 8 years, there is a crash, and next time when the market goes up, it goes again on a new all-time high. So better not to exit or stop your SIP unless you need the money in the nearby future. And what is the right time to invest and buy mutual fund products? Yes, this is one question. I would rather say don't agonize over the market movements. Don't wait for market to crash so that you will invest into mutual funds. Uh, Always ride the market over SIPs. That's the best strategy. So start investing through systematic investment plan. So that will over the period of 2, 3, 4, 5 years, when you are investing systematically every month, so that will definitely consider all the opportunities, all the ups and downs in the stock market will be taken care of, and you are going to generate very good returns when you are investing systematically on a regular basis, rather than waiting for market to fall down in order to invest. And whenever you are planning to invest it in IPs, and go for regular investment of a longer time. So if you like my presentation, don't forget to tap on the like button. Thank you. Happy investing and a very happy new year 2021.